Okay, so today we are talking about what will cause the stock market to crash. And Danny actually had a interesting point. He said, well, considering that the economy and or the stock market is recovering right now due to extensive federal intervention, QE, low interest rates, what would cause it to crash?
The economy gets good.
The economy gets good. No, but not only that, the Federal Reserve will not raise rates just because the economy is good. They will raise it because of inflation. That's what they're supposed to do anyway, because their two mandates are inflation plus unemployment, and I think that unemployment was added in the 70s or so. So in other words, there's every reason to believe inflation will come back. Think about it. The federal government is spreading money, billions and trillions all over the planet. I mean, soon a coffee will be 20 bucks a coffee at Starbucks, and you won't even be allowed to sit there, right? It will crash because inflation will scare the Fed, because they'll say, we got to stop these prices from rising. This is crazy. So then what they're going to do is they're going to raise rates. And what happens when they raise rates is they usually are a little bit too aggressive. Just like they are too aggressive lowering it, they will probably be too aggressive raising it, because they're going to just say, we got to stop this as soon as we can. But the way rates work is it doesn't have an immediate impact on the economy, so I don't think they are able to really know how much of an impact it has. It takes a while to work its way through the system, right?
We will see. We will see what they do.
So yes, of course there will be another stock market crash. The question is when. But here's the other issue, is that when people are all saying, oh, it's going to happen, nope, and then it all of a sudden doesn't happen. Notice we had a 35% crash in the stock market, and people were saying as it went up that it's going to crash further, and then that didn't happen. Now it's possible it will happen. I've heard people say, oh, there'll be a W. It goes because it has a V shape. It went down and it goes up,
or
and then it goes back down.
Or the L is the bad one.
The L is a bad one. That's more like a Japanese style stock market crash, where it crashes and then it never recovers. But if you think about it though, it was clear there was true irrationality though with the Japanese stock market, because their market was more valuable than the whole world's economy. And you have to think, wait a minute, that's a little tiny island nation? You're serious? It should be worth more than all of the other economies combined? That doesn't make sense. So a lot of people probably could tell that was going to happen. A lot of that just was irrationalism. I don't know why people believe that their market was just going to keep going up forever like that. And they've been doing everything they could to get it back to where it was, but it doesn't seem like they're having much success with that. So in other words, what's important though is that debt eventually does cause a crash. Now, as example, Japan's debt level is now like 260%. Is that what it is?
I don't know what it is.
It's high. It's like 260%.
But Nikkei is down 50% from its all-time high from 1991 or so.
So that shows if you get enough debt, the economy is going to slow down, because you're spending money to pay debt back. You could say that Japan, the money that they spent, it was in the past. They enjoyed all that. They had good times in the past. Now they're taking the pain, because they wanted 2020 a long time ago. They basically got their benefit a long time ago. Now the economy has to pay back their leisure and all their enjoyment from the past. And that's another reason why debt ultimately causes crashes. It's a matter of people living far beyond the moment and thinking that it will somehow magically work. But the markets don't like exuberance too long. Eventually it says enough. That is not going to go on any longer. Is that right?
It will go a long time.
Well, it can go on a long time.
Then you can stay solvent.
Well, you can buy, if you believe that the stock market is going to crash, or if you're just trying to hedge your portfolio, you could buy S&P or NASDAQ put options, which I will actually consider buying in the future, because I think it's a good idea to oftentimes remain invested, but have more limited downside risks, to be able to stay in longer, not get scared, because you bought the insurance policy. It's going to actually keep you on the right side of things. And I think that's a very, very smart move. There's a famous guy named Talib, I believe, that his hedge fund Well, at least he advised that his hedge fund did like, what was it, 5,000% or 4,000%, and during the crash, because he's really properly hedged for a crash. Is like, that's his whole thing, is you got to be ready for the crash, got to have the heads on. And so he did really well, whereas a lot of people did extremely badly. So there will be a stock market crash. You probably won't be able to time it. It's probably best to just always think, I got to be ready for this. What am I going to do when that happens? How do I avoid harm when that takes? Well, that's the one way of thinking about crashes. I mean, crashes are actually a very big topic on YouTube, and people are always worried about it, as they should be. And
it's very scary too.
It's scary when it happens.
It's scary to look at your
It's scary. It's probably more scary if you're into certain individual stocks that do really, really badly during a downtrend, because oftentimes during a downtrend, some people will hold stocks that do way, way worse than the indexes, and some of them might never come back, because the way it works is after the downtrend, there's sometimes a rotation to new leaders, so some of your stocks don't come back, and some people just sit on their crappy stocks for years or decades even, and that's pretty sad. So it's best to keep that in mind, to have some kind of risk policy, get rid of your crappy stocks before they become 90% down stocks. You definitely don't want that. So definitely subscribe, right? So smash that like button, subscribe, right?
Yep. Make it turn blue.
Make it turn blue on the like button, and leave a comment below, and I'll respond to you even. So that's my promise to you. So see you in the next video.